All right. Hello, everybody. Sunday morning or Sunday afternoon, January 15th, 15 days into the new year. We are here for Finance Junkies.
What's up, everybody?
Ring that stupid bell, bro.
I don't even feel like hearing it right now. I'm tired, too. I'm not going to play.
Good.
Psych, we're going to play.
God, I hate that sound.
I
Oh my God.
All right. So, Kris, you're full bull on Tesla now, right?
No, I'm not full bull.
You said you're buying shares. You're DCAing.
We have the receipts, man.
Not yet. All right, hold on.
Oh my
I said
God,
I
dude.
was
You
another-
are like biasedly pessimistic. Like you are so pessimistic. It's actually like it's like a bit much, man.
You know what it is?
I don't think we can hang out with you anymore.
No, it's just I've been burned in the past by being a little too optimistic about things. So now I'm always trying to challenge my thesis. If I can't
But
challenge
did you stop dating when you broke up with your first girlfriend? Like,
but then I realized,
That's
hey, there was
equivalent here.
better out there, dude. You know, I'm just saying right now.
like,
I
I
am
get being cautious, but you are like really pessimistic, like on everything, every metric, every.
I wouldn't say I'm pessimistic. I mean, there's a lot
He's
of
realistic.
There's a
I
lot.
mean,
of
you can paint pessimism as realism, as if you want. That's what all the bears say. I'm being realistic on Tesla's valuation. It should be $50, and you're like,
well, here's the thing. Being the pessimist that I am, I'm actually reversing a lot of the opinions that I had. Like, so this is what I did as an exercise. Because Elon dropped the prices on the Teslas and stuff, I took my lens off as an investor, as a shareholder, all that stuff, took it off completely and said, you know what? Let me investigate this from the consumer side because I wanted to gauge it as a consumer. So a few things that I learned actually were very eye-opening that I never even considered in my investing thesis. So the first thing was just when I went to order a Tesla, right? What are all the costs, the charges that are there, and what are some of the revenues that are going to be coming into Tesla as a reoccurring payment? Like a lot of the ideas that I had, like, oh, Tesla's a car company that they make their money on selling Teslas. I don't think that's the case. I think majority of their revenue, especially in the future, is going to come from all the value-added
software.
Yeah, and the software that comes along with it. And it's kind of crazy because I think that's where a lot of people are getting it wrong. And I feel like I've gotten Tesla wrong on that level also because I was also like under the impression like, hey, this is a hardware company with hardware margins, and that's always going to be the case. But I'm starting to actually see the difference. Every time I was trying to do something else, like, first of all, I didn't even know that there was a monthly fee for the cellular service, right? Which may seem very small.
Or yearly. I pay $100 a year right now.
Yeah. You wait for the premium connectivity?
Yeah, it's $100 a year.
So I thought it was $199.
No, it's $100 a year or $9.99 a month. You could do it monthly, but yeah, absolutely.
Okay.
But Tesla's using that as a loss leading business right now. They're not considering that as a massive revenue. But imagine they raise it to $12, $13.
Well, especially once the cars are like 20,000, they can jack up the price a little bit on the month. Yeah. I mean, they're basically following Apple's model, right? Get you the phone, get you into the ecosystem, and then start charging you $5 here, $6 here, and you can never leave. Like, I'd love to use Waze as my primary navigation, but I can't. So I have to pay Tesla the $9.99 a month or the $100 a year to have traffic, traffic aware navigation. I'll pay it.
If you just think about it this way, if they sell 1 million cars and 1 million people end up with it, that's $100 million a year in revenue that's just going in. And that's concurrently going to be adding. 10 million cars, you're going to be looking at 10, almost $1 billion in just rev, just by doing
Kris, the competition and the demand concern, those aren't factoring into you right now.
I would say, I think Elon is being smart. The other thing that I also looked into was, from a cost perspective, from a consumer, right? At what level does the Tesla not make sense, and what level does the Tesla make absolute sense? Like right now, after those price cuts, my father-in-law, who never has ever spoken to me about electric cars, I didn't even know he was a car guy. He called, like, me and him were just talking. He's like, hey, what do you think about getting a Tesla? And I was like, wait, what? Because now the interest is out there. People are, I think with this change in pricing, Tesla is comparable to ICE. Before it was comparable to
high-end luxury,
but now it's comparable to ICE, especially on the Model 3. If you there's a chart that
Model 3 just became the #1 selling. It dethroned the Camry in Australia.
That was the Model Y. Wasn't
No, the Model 3. The Model 3 just dethroned the Camry.
Can you go to Twitter for Farzad and show that chart that I retweeted? I think that chart is very eye-opening as to where we are in the EV transition. The other thing is when I was driving down from Georgia to Florida, you know, you would think that you would see one Tesla, two Teslas every like maybe hour or two. I kid you not, every maybe like 20th car was a Tesla, right? We've passed so many Teslas.
East Coast has a lot of Teslas, yes.
Yeah,
and I'd say double that out here. I'm telling you, every other car at a red light, you see you see them all. You see 3s, you see Ys.
Yeah, just blow that.
And actually, no. To get back to Amit's point, I think the idea of the competition is coming. I think those sales are going to cannibalize ICE vehicle sales more than they cannibalize Tesla sales, especially with these price cuts and the price incentives. So I don't think it's something that, like, say, Tesla has to worry about because of their other advantages. So that's my take.
For a decent ICE car, it's going to run you about the same price as a Model 3 standard right now for a sedan, which is like when we bought my my wife's Lexus, which is an SUV, we paid more than that. We paid about 40 grand for it, right? And it doesn't even come with all the benefits that this comes with. So I think we're getting to the point where the competition is no longer other EVs. I think the competition now is ICE.
Well, there was never other EVs. This is the big misconception.
Yeah, there are no.
CNBC tries to convince you that they're going against other EVs. They're not going against other EVs. The other EVs that are good, like Rivian, will probably do very well, even in this environment with Tesla knocking its price, because Tesla still doesn't have a real competitor. So I think certain EV companies will do good. What's interesting, besides you becoming a bull, because now I don't know what we got to talk about. We all agree now, right?
I know. It's going to be like the SoFi Weekly.
Yeah, it'll be SoFi Weekly.
Hey, SoFi Weekly is a growing good podcast about an e-bank.
Four guys agreeing live.
This is like Palantir Daily. This is Palantir Daily now. Okay.
This is SoFi Weekly is a circle jerk. Just admit it, bro. You know,
bro. The stock. Hold on. The stock is $5 and it's growing. Like I don't get how you guys don't get.
All right, let's not switch to shitty stocks now. Let's continue on this road. Let's continue on this road that Tesla's winning. So, Kris, I don't know what. Okay, so I just want to find out when this happened because me and you and Carlos.
He had a dream.
No, hold on. We've been talking about this for months, like literally months. We're saying, look, Tesla's not just a car company. We've been saying this, not just hardware. We've been saying that they have all these software stacks that they're adding. Even if FSD, I've talked to you about this, even if FSD is not full FSD, there's a price point which everyone will pay for some level of autonomy. Maybe it's $100 a month or $50 a month. That's a massive business as they grow to 10 million cars a year, right? So how are you just coming upon this now that this is now becoming evident?
Because there's a lot of misconceptions that I think I've had because of the way that like I've always had ICE presented to me, that unless you put yourself in the consumer shoes, you won't understand. Like here's one fear that I had, like that was crazy. Like, oh, the cost of replacing the battery is almost like $20,000. That's really crazy. Yeah, but the battery is covered under an 8-year warranty with like almost 500,000 miles.
120,000 miles.
150,000.
No, I'm saying, but the batteries last to about almost 400,000 miles. 120 is under the warranty. But so I'm like, wait a second. My wife's car, what we've been driving, has 110,000 miles, and that's like 5 years in. And we're like, hey, it's time to start thinking about replacing the car, right? For a Tesla, you've got all the way until 300, 400,000 miles, no moving parts.
There's a guy on YouTube whose Model 3 hit 1 million miles, and his battery reported a 2 to 3% degradation. So that means that like over that 10 years or whatever, it's a 3% degradation in your battery. That's like insane.
I think you're wrong. I think that's wrong. It's going to be around 20% degradation. It's not. That's not true.
So Vitaly, that was the other thing too that I was concerned about. I was like, oh, every like let's say year or 2 years, the battery would degrade by 10%. And I didn't realize that there was
10%.
The slope wasn't like this. It was actually like this, where it actually flatlines after a while, right? Where yes, you'll have battery degradation, but it's not going to be like a linear, okay, every year it's going to go down by 20%. In the first 100,000 miles, it does degrade about 10%, but it falls off pretty precipitously after that, right? And the other thing is, even from like a consumer standpoint, 300, like let's say you have a 325 mile ranged EV, right? and the range goes down to 200 miles a day. That's still really good for my wife because she's a commuter and she barely does 100 miles a day, right? And that's a lot, like to go 100 miles a day. And you just charge it overnight. You're back to being normal again. So that would be like your family commuter car. And then you would buy a new car and that would be your long range car, you know?
So I'm going to do some math for you. Because I actually have some figures on this with my car for 2 years. And I sent Amit a chart. Do you want to bring up that chart? So my car was 300.
Can you say please?
Please bring up the chart.
Okay.
That word doesn't exist in Russia.
Yeah, in Brooklyn, if you say please,
there's no word for please or thank you in Russia.
First of all, I'm in Brooklyn. What is this Russian nonsense? Okay. In Brooklyn, we don't say please. We say you better fucking do it. All right. So 330 miles is approximately, right? The car, is that what the sticker? 330 miles?
For which one? The
Model Y.
The Model Y long range 330. Yeah.
I'm around 306 right now because it doesn't charge the 330 right now. So, and that's after 2 years plus. So let's say 306 divided by 330. It's at 92% efficiency right now, 2 years later. But there is a curve that it goes on where I think he's showing after 250,000 kilometers, but I'm not sure what that is in miles, that it goes up to what, 92%, 95%? Can you bring that up? Make it bigger?
Oh, this is okay. Gotcha. So
I think the takeaway would be that even if you lose 8%, let's say you lose 8% over 500,000 miles, right? That's 8% of the battery, but that doesn't include, when you compare it to what happens in an ICE vehicle over the same period of time, with all the different parts that can fail that are going to lead to less performance and the amount of money that it costs you. And like you said, by the time you get to that degradation point, you're out of the vehicle. You're not going to hold the car for 10 years. Let's be honest. No matter what Tesla you buy, I don't think people are going to hold that same car for 10 years. So it's long gone by the time you get rid of it.
Okay. So at 155,000 miles, I'm just looking at it myself since I don't know where you have it out. It's around 90%. So after you drive 155,000, you're around 90% for the battery. That's what roughly it is.
Which is not bad.
And that was like I said, that was one of those misconceptions that I didn't necessarily deep dive into before, because you even though I just said on Twitter, just literally 2 seconds, I said, oh, you know what? Like the next car might be a Tesla. Bro, I had a lot of haters come on there and be like, oh, and I was like, why are people hating on Teslas? Like, oh, they're low quality. But yet when you go to Edmunds has tons of reviews about the higher quality of it. You ask any Tesla owner, they'll tell you the quality is not that bad. Yes, there are.
We've been telling you this.
Yeah,
even on Consumer Reports, it has one of the highest customer satisfaction, even if they say that the build quality is this or that.
So what I would say to most people, especially if you're trying to be an investor in Tesla, I would say first and foremost, before you look at like the numbers and everything, look at it from the consumer angle and see what you're likely to purchase yourself. If you're likely to be a consumer of that product, that means that there's going to be a lot of other people that are likely to be consumers also. Now we can talk about the business end and say, okay, what are some of the areas that I think could be a long-term potential for Tesla also? So the other thing I looked up was lithium, because that was the other concern that I had with, oh my God, all these other EV companies are coming around. That should jack up the price of lithium to a crazy amount. And then guess what? The price of the cars will be unaffordable and the margins of Tesla will drop significantly. Well, there's a couple of things I learned. Number one, if you look at the lithium, like the kilowatt per hour battery cost of 2013 to what it is now, it's literally been like this, right?
Yes.
This is the first year in probably the last 10 years where Tesla, like the prices of batteries have gone up. First year ever, okay?
Right.
But the thing that I didn't take into account was how many lithium mining facilities are starting to come online. So I did an estimate from the EPA and some of the other energy, energy companies. The amount of mining for lithium and some of the other minerals that's going on right now will far outpace the demand by 2030. So all the price, like the other thing that I was, like I said, concerned about was the cost of lithium and how that's going to impact Tesla and its margins. I can honestly, safely say at this point, the minerals, the concentration of lithium and all the other stuff that goes into producing the cars will continue to go down over the next 5 to 10 years. The cost of the battery itself will go down, which means that if Tesla can hold on to its margins, which I think are very real, we may not see as much margin compression as so many other people, especially on Wall Street, are putting out that, oh, Tesla has 17% margins right now, and the margins will go down below 10% and end up being like a standard, automobile company, in which case.
Does that mean it's time to buy?
I would say the Q1 numbers are something that I would want to digest before I would say 100% that, hey, maybe it's the route that you want to go. But I think the options on Tesla, especially from a risk perspective, like they are very, very good on the upside. So basically it's basically like, do I want to risk $1 to get 5 in case of a flat scenario? Because I told you guys the strategy that I was showing to you guys. Like, I don't want to bring it on the YouTube side, but I think the more compelling thing would be options rather than buying the stock, right? Because the stock is expensive in terms of holding your collateral, whereas the options, you're looking for either we're right and we're right, like, and we make a shit ton of money, or we're wrong and we just lose a little bit of money. That's kind of my way of thinking on the Tesla story right now,
So do you still think Microsoft's going to be the most valuable company in 10 years?
Yeah, I think so. It's AI, baby. It's AI.
After all that. I mean, Tesla's got AI. All right.
Well, I want to mention that the margin thing. Look, Q1 numbers I think will be affected because we haven't seen the price reduction right now is Q4 numbers are going to be affected. Q1 numbers might actually start to reverse themselves because if they've sold just more product, that will be a big difference.
That offsets, Chris is muted. Right. It offsets,
I don't know if you muted Chris on purpose, but so yes, that'll offset some of this negativity that is happening. So my plan is I'm hoping Q4 will be in the toilet. That's what I'm still hoping for. I have been DCAing very slowly, but I think that's my last chance to just like buy whatever Tesla shares I want this Q4. Hopefully it tanks and I have a month or two of like, Tesla FUD to buy it, because what happens is, and this is akin to what Apple did actually, and Sawyer Merritt on Twitter brought it up. Apple in 2011, 2010. I forgot what year it was. 2009. Doesn't matter. They actually also lowered the iPhone prices 30%. Nobody remembers that, of course, but he said they lowered that too. And look where Apple is now because they were able to still grow.
I didn't know that. I didn't know they did that.
I didn't either. And he said, yes, they lowered them as well in order the short-term pain of growing their market share. Because remember, what happens when Tesla sells double the amount of cars and you see double the amount of cars and your parents see double the amount of cars and everybody's like, hey, do you like the car? By the way, I was in a conversation I'll tell you about with another person who's buying an EV. He has a gas car. He's buying a Fisker. Okay, but we can go to that for a second.
Okay. A
Fisker Ocean. But he's like, do you like the car? And then that started the whole conversation with the table I was at. We were at a party. Everybody's like, okay, tell me about the EV. Like, how did you get here? People are still asking me, like, was it a problem getting here? Did you have to stop at a Supercharger? It's like 60 miles. I'm like, dude. I'm like, guys, you can drive 300 miles. There's no problem anymore. It's not the same, but it shows you that a lot of people still don't know, right? So if Elon can get these cars out, even if the prices are down and the margins are hit, this is what I'm getting back to, that I think we have an opportunity where we might have an explosion in growth of Tesla, meaning like besides the people who've always wanted one buying one because it's cheaper, I think just other people seeing it, other people experiencing, other people seeing your neighbors now buying it because, then you start talking to those people and you're like, do you like it? Yes. I've never heard one person say I've hated this car.
Me neither.
Okay. Besides the Tesla Q, which don't have it.
Yeah.
They're the ones who are saying don't buy the car. But as an owner of two of them, I don't know. I love it. I think it's like the best fucking car I've ever had. So,
but and also like Apple, once Apple got you in the ecosystem, they start upselling you. They get you on apps. They start getting you on your email. They start getting you in the ecosystem. They get you on music. You subscribe to that. That's Elon's thing. Even if they make $500 on the car, what happens when they solve FSD and they turn it on and people now paying 15 grand for FSD, pure profit, or the $199 a month for FSD, the $100 premium connectivity, plus the infotainment that's coming, right? All the infotainment, the app store, which we talked about in on the web, on WhatsApp. it's the idea of just get them in the ecosystem. Like Vitaly said, that's better advertising than anything else. Just seeing all these cars around, and then you start turning on the software. Then you start getting that SAS margins. It starts to become a crazy number.
And don't forget about their insurance product, because as I was saying on our group chat, right now, one of the other things that was holding me back from buying a Tesla also was the total cost of insurance on a Tesla is way higher than what it is.
No, it's not.
Well, no. Depends. There are states right now that have Tesla insurance that literally are half the price of what Progressive and some of the other like Geico and everything else have. Literally, like the guy from What's Inside, I forgot his name, but they have more. I don't know. Yeah, I don't know his name, but so basically he did a cost comparison and they did it live. Like, okay, what are the costs going to be? And the costs are much, much lower than what you normally would pay. The other thing is Tesla owns its own repair fleet that they can do all the work. They're the OEM to do replacement parts if something gets damaged, right?
Yeah.
So
they make a good profit on that. I'll tell you, I've had a couple of repairs and they make good margins on that too.
And the Supercharger network, okay, Tesla's training us, by the way, because when you go to supercharge your car, I don't know if you guys have done it, Amit and Kris, but you just show up and you plug in. You don't even know what the fuck you're being charged until you actually look and you've charged your car.
But you see it charging it. You see it.
I know, but it's like $1, $1.25, $1.50. I'm like, where's this? Where does it say how much I'm paying for this? Like per gallon type of price.
Right.
They're getting that out of your head. And so you just plug in, you charge. They want you to go live your life as opposed to worry about what's going in the tank. So I'm just wondering if there's like I keep going back to the massive business building up where a penny added, like the old Superman, right? We're going to steal a penny from you guys.
Kilowatt hour, right?
Well, there's one thing also that I learned that was kind of cool was the reason why their supercharging network, even though there's a shit ton of supercharging networks right now, I think like 4,600 or 4,700, or I think it might even
more than that.
4,700 broken chargers. Yeah.
No, not broken chargers. I'm saying
about supercharging network.
I'm kidding.
There's so many stations, but one of their biggest limiting factors was that those V3 like the superchargers, like itself, the production was mostly in the US at one point.
40,000 superchargers, by the way.
Yeah, they have 40. No, I'm saying they have 4,500 or 40,000 supercharging locations.
It says 40,000 maybe it's just the actual chargers, but that's
that I think is the charge. I'm trying to think about like the superchargers themselves, like like each station. One of the biggest limiting factors was the number of supercharging stations that are around the world is growing exponentially, and they moved all the production for the superchargers, like the physical, like thing itself, to China, and actually China is cranking those things out at way faster pace than what it was in the US. So one of the bottlenecks that they had to get more superchargers out into the world was that bottleneck. They solved that about 1.5 years ago, and they're going gangbusters with that. Same thing with, then I think we can talk about Indonesia, which is another location that they've identified for production, and also Mexico. And I think that's the other thing that we could segue into. Because
hold on, let's get into that segue. But before we do that, Vitaly, I have a question for you.
Well, before you answer, the Kris question is still like, why are you such?
Hold on.
Why are you such a bear?
Yeah,
you're a bull. You're a bull.
What is it going to take? Like that's what I'm saying. When you're saying you've been talking 22.5 minutes about all these new things that you haven't seen.
He just wants to see the numbers. It's not that hard. Like it's okay to see the numbers. Yeah. It's okay, right? Like why would you DCA a week before, 2 weeks before the numbers?
That's the point. Yeah, that's right.
No, I don't know. It's just I sense a real hesitation.
Like I said, I'm still not. Yeah, I'm naturally just a very pessimistic person when it comes to certain things, especially when the valuation is still relatively high compared to what the industry. Like it's hard for me to get Tesla out of my brain as a car company, but I think as I'm doing the research, it's starting to go. And it's getting to the point where I think I'm only about 10%. Like, hey, this is not actually a car company. This is way more than a car company.
So why don't you DCA and just do the smart thing? I don't understand why you have to time some bottom. Why can't you buy 5% of a position? And if it drops like a rock, you buy 20%. I don't understand why you can't. Why do you have to hit the bottom? What is this belief? Everybody has to get some fucking magical bottom here.
It's not so much the bottom. What it is, Vitaly, is that I know myself, if I end up doing the first trade of Tesla and it goes down significantly,
Okay.
I'm gonna feel like, oh my god, my brain was like, everyone.
Long-term investing.
I don't understand. Yes.
I understand that, but here's the thing. I know myself as an investor, and one of the things that if the first step I take, I'm already like losing on, that means that it's going to be harder for me to take the second and third step.
Hold on. I have a follow-up immediately. This has to be answered because this is the opposite of good investing, by the way.
Yeah.
Why do you want a stock that you want, as you learn more about it, why do you want it when you bought 5% of a position to just shoot off to the moon?
Well, 5% is still a significant amount. I'm heavily diversified.
No. I'm saying 5% of the position you want. I'm saying.
Right.
So let's say you put in a little bit, you DCA'd, and it shot off to the moon and it doubled on you. Yeah. And you don't buy anymore. Why would you want that?
No, I don't want that.
You want it, but if you believe it, you want it to go down.
You're missing the point. You want it to go down. I want Google to go down right now. I don't want it to keep going up.
I'm with you on certain things going down, but not right before earnings where the numbers are about to come out. It's a buy. Literally, once the numbers come out, I can make a way better informed judgment on if I want to actually go in and how deep do I want it. At this point,
my bet will be you'll see something in the report and you'll say, well, I'm going to wait for Q2 because I didn't like this metric, and you're just going to, it's never going to be low enough. The numbers will never be right. And then it's going to shoot off to the moon and you're going to say, man, I should have bought call spread option on the, then you're going to say, fuck, or I should have bought this or this or that.
I would rather lose the opportunity to the upside than to literally destroy my bull argument.
That's the difference between us.
That's why. Think about how much
you just hit the difference between us, right?
See, that's the thing. I'm a much more conservative investor than a lot.
You're investing to not lose money. That's the thing. Yeah. You don't want to lose any of your capital. If we showed you, if Vitaly and I showed you how much, I mean, just me in crypto, how much I'm down, I'm still up, but how much I'm down or how much I'm down on my Tesla position and still buying. I think that's the long-term investor.
Kris,
being like, this doesn't matter.
I just want to point out, you don't get to have these two Oculuses. If you don't invest real heavy.
Oh, they're like they don't buy this. Is not investment money.
You don't get these two things, right?
Dude, all I know is I try to be like I am at a point in my life where I need to be a little bit more conservative. Not to the extent that I am. I'll be honest. To you guys, I'm still young enough to the point where I should be making more.
How old are you?
I'm 38 this year.
Okay.
So the thing is for me, and you got to remember, next year I'm trying to buy a house also, right? So I'm also in a position where I have to be a little bit more, hey, I can't lose so much money in the short term. You guys might have your homes already set, everything is, but I have other expenses that are coming up, that I have to manage.
That's different. But first of all, everyone can say, look, I'm going to DCA into this $50. Like, it doesn't have to be tens of thousands. If you believe in something, you can just start small and you keep going. This is what I don't understand about your position, that big deal. You put in $1,000 and it doesn't go your way. Like,
does the world end?
$800. Yeah. I mean, like, does the world end?
Only $800.
Once I start going in, I'm not going to go in like 1,000, 2,000. I'm literally like 5, 6, 7, 20,000.
You have a maximum. My point is, I still have a number for Tesla where if it hits $50 in some crazy scenario, that I have money sitting there for that stupid scenario, right?
Yeah.
But it doesn't mean I'm not DCAing right now because I don't know where the bottom is. And in fact, we might be getting very close to a bottom in the whole stock market because some of these stocks should not be, as you keep saying, at a certain price. NVIDIA, why is NVIDIA pumping so hard?
Well, we can talk about some other individual names, but you guys know, because based on what I've shown you, if I feel like a stock is very undervalued, I don't mind going in heavy. Like when I saw Meta go down to where it was, you guys saw I went in heavy. So that's the only thing. I would say that the valuations also need to make a little bit more sense. Like I said, I think that Tesla is very fairly valued at what it is right now. Meta was undervalued, so it made it almost like a no-brains investment. If Tesla tomorrow drops down to less than 100 to like 90, dude, I'm ready for call options. I have money sitting in my account right now.
Several people in the comments have wanted to know how is it you can be, say, so conservative yet you're so heavily invested in Snowflake.
Because
it's a good question.
Because I see
several people are asking, like,
Kelly said it. I can explain that. I can explain that very well.
Wait. Yeah. Okay, before you explain that, I have a question for you guys.
Yeah,
it's a real thing that's happening right now. Okay, just got a text message from a random number. It says hello. I was like, first of all, it's not a blue and white; it's green. So I'm like, who is this?
Who's this Android?
They say what?
It's an Android person.
It's Andrew. But yeah, they say hi. It's Serena.
Don't talk
I
to
said,
them.
hold on. I said, why are you texting me? They said, oh God, I think I got the wrong number. Are you not Kate? I said, nope, not Kate. Haha. Do you think I should be like, but what's up though?
No,
That's like,
no,
what
no,
if
no,
Serena turns out to be my
I
soulmate?
get those.
Like, what?
I
You
get
know
those
what I'm
things.
saying? Like,
they're
this
actually
in the
fishing.
movies,
They're actually
Yeah.
fishing.
yeah,
They're fishing.
Don't do it. Don't. That's fishing.
That's a
dude.
common.
What if
fishing.
she actually is making a mistake? And
That is
that's
an-
like,
dude.
That is an
No,
old
no,
Chinese
no,
man
no.
fishing for you.
Yeah.
Seriously, it is.
Okay.
It's some dude in
Yeah. Next
sweatpants.
up is hey, send me some
Or
money.
actually an old Indian man, possibly too.
This is my
I'm just
cash app.
saying, if
Send
this
me
is
some
actually
money.
Serena, bro, like,
No, it's
like
not
you never
Serena.
know.
Serena Williams, did you ask?
Okay, now on a serious second question, Vitaly, was it your birthday yesterday?
Today.
Oh, shit.
Today, happy
Happy
Yesterday.
birthday.
Today. Yeah.
Vitaly!
Oh, God. Maybe the present was you didn't ring that
We all
dumbbell.
forgot. It was your
I
birthday.
know. All he wanted for his birthday was a day without the fucking bell.
Silence.
No, you told me it was your birthday like 5 days ago, but I thought it was yesterday. I was like, oh fuck, I missed his birthday, but it's today, so we're doing a podcast on your
There you
birthday.
go.
Did the
Yeah.
pack-
Awesome.
did
Birthday
the pack-
dinner right after, baby.
Did that package show up? The thing I sent?
No. The blow up doll?
The what? Yeah, well, that's all-
You did mention that.
But
All right.
he wanted one that was half black, half Asian. So we had to,
Blasian.
we had to buy two.
Nah.
We had to do a custom.
I asked for Anna Nicole's vagina.
Wait, what did you? So
Anna Nicole Smith. I remember her. Anyway,
She's like 70 years old
Yeah,
now. It's
I
kind
think
of
No,
dead.
she's dead.
she's dead, dude.
yeah.
That's why I wanted.
Wait, what did you what did you do in
He
the,
wanted
in the
the
beginning of the
actual
day for your birthday?
He's doing it now.
I'm taking it easy, man. No, actually, I got a PlayStation 5 for myself, and I was playing a Spider-Man Miles Morales with the kids. It's a fun game.
Wow,
Yeah.
Yeah.
wow, it's
Really, really amazing game. Actually, super fun.
And then what are you going to eat after?
We're actually going to a tavern, so it's like just a bar grill, tavern type place. Nothing fancy.
All right. Happy birthday, V. We love you. Appreciate you being here.
Thank you.
All right.
Well, I
First,
did have a follow up. Okay, so we've got
Wait, hold on. Let me do the snowflake.
You have to
thing.
explain the snowflake
yes,
thing.
the
and then you can-
snowflake. Yes.
So Snowflake, everyone that I speak to in the industry, they love the product. It's growing like crazy, and Snowflake is not a material position in my portfolio. So when you have something that's a little bit just like kind of,
Chris, do you own anything?
huh? Man, I do. And
What is the largest position?
Well, and how much money is it? That's it. It's time we fucking find out. This is ridiculous.
all right, fine.
Do you
So
have
let me-
$3 to your name? I mean, this is ridiculous.
I'll tell you. So my Facebook position is probably my largest with probably $150,000. Right?
Smart.
Yeah.
It's a lot of money.
So
A lot of money on Zuck. A lot of money on Zuck.
half of it is in options. I'll be straight with you guys. I
That's
bought
smart.
Wow. Okay. 2 year like leads.
Yeah,
2 year
2
like
years
long. Okay.
Yep. And I bought a ton of stock when it was down in the 90s, like mid 90s, something like that. So when I saw that the value was there, I was like, all right, it's time to jump.
By the way, the value is still there.
Yeah.
It's
half
crazy.
Of it, half of the other money that I have is stacked in cash right now, just waiting to be deployed for good opportunities. And then like I have in my retirement portfolios, which is just S&P 500, just indexing. I don't look at that portfolio because that's like, hey, I'll wake up one day and I'll be an old man, and that's like my my safe haven.
Okay,
right?
so you have one big position, everything else is small.
Yeah, everything else is very small. Like when I get conviction on something that I think is really going to be big, I'll go in heavy with it. But for the most part, I'm conservative and I just dollar cost average into it. Like it very rarely, like the whole meta thing was a very rare move on my part, but it does happen once in a while. So
And smart. I think Meta has a massive upside. In fact, so much so I've been thinking about it very hard. Like, should I still continue to buy, even though the S&P might tank? I think Meta bottomed at $80 something. I think I don't think we'll
88.
see that again. Honestly, I think if we're lucky, we'll see around 100, 110. But even then, I'm thinking 130, 100 in the long term. Just think about it. In the long term, it just seems so cheap. It still seems so cheap. So I might be buying another 100 shares or so pretty soon. I might wait a couple of days, see what happens if it dumps a little bit.
Yeah.
But I'm thinking I need to get some more of that.
Yeah.
Yeah.
Yeah. So like I said, Snowflake is a very small position. I'm dollar cost averaging. They're performing really well. And the thing is, like every time you know how when you guys spoke to the installers when it came to Enphase, well, when I speak to anyone in data science, everyone is like, oh yeah, Snowflake is great. We love the product. We use it all the time. So it's almost like, wait a second, what am I missing out on here? And then when I look at it, there's all these other things that are built on top of it. They have a great venture capital firm that they're actually buying into a lot of next gen companies. And the way that they're doing their business, like I'll give you one example of something that they did that's super smart. So they do something called the Snowflake Challenge every year, where people, like, they actually give the product free to like teams that they build like software, they build applications on Snowflake, right? And then they choose a winner, and then they'll actually invest in the winner, into their ideas, right? But here's the thing, that's a master class in how to get broad adoption, because now all these companies are all building applications on Snowflake, right? And even if, let's say, you don't win, your team doesn't win, you just became a developer on Snowflake, the application, the tool set. So now if you go to your next job, you can bring up, you can bring Snowflake right into the mix. So there is definitely a lot of great marketing thought that's going into Snowflake, the product everyone loves. And yeah, like I said, I think Snowflake has a long way to go, and they're executing very well. So like I said, this is a small dollar cost average position for a long period of time for me.
Yeah, I feel you're very safe. And if we were to talk about philosophy for a second, at least, because it's important besides talking about the stock, the most money I ever made is by buying and holding something that was, maybe you can say, speculative. Like, we can talk about specifics. And in fact, in one of the podcasts we had, hold on a sec, one of the podcasts we had, some guy said I was a one-hit wonder. I was like, you know what, bro, I don't want to go into everything, but I'll go into it now. I've been investing for 20 plus years, man. It was either real estate, crypto, stocks, equities, whatever. And I've had many wins, not just one. And the main reason I've had those is because I was able, into a lot of cases, just buy it and not touch it. Every time I bought it and touched it is when I lost. I'm not even joking about that. Like, I could go into 100 times I've bought and sold and lost because I lost my faith in something, or I got scared and I didn't go in as hard as I should have. But every time I did do that and held, honestly, if I made a smart decision in terms of doing my homework, those were great decisions to make. And I think Carlos might have similar things that he did in his past that he can talk about. But what you're doing, besides the meta thing, which I think you're totally right on, by the way, and you can make some money on that, what you're doing is you're being a little bit too cautious. And that's going to cost you a lot of opportunity and a lot of wealth as you grow and build. Because there's always, I think Peter Lynch said it best, the hardest part of holding something is the stomach. It's not the brain. So there's going to be
it's what George Soros told Stanley Druckenmiller as well, right? It's like, when you really believe in something, you go all in and you leave it.
You don't have to go all in. That's what I'm saying. I always go into like 4 or 5 things that I believe. When I hate when people say one thing all in. Like, I would never be all in Tesla, by the way, and I'm not. Okay. I have 4 or 5 different things that I put in. And then if 1 or 2 of those do crash, like Tesla does, something else is keeping it afloat. So I'll give it concrete examples. Like, I went into real estate early. I still have it. I haven't sold much real estate in like the last 15 years. I could take my money and go out the window, even though it's going to crash this year. Everyone's expecting a lot of, dude, I'm up so much money. Let it go down 20%. I don't give a shit, because I bought an asset. It's an actual asset that'll be worth more in 30 years than it is today. I know that. When you're buying Tesla at this price, I have no doubt that Tesla's worth more in 5 years. Forget about this year. I have no idea. But 5 years from now, are you telling me that company, all those bull cases you gave, is not worth more? That's enough for me to buy it. Okay? That crypto, Bitcoin, and Ethereum, I know it's speculative, and I'm not saying everybody should go all in, but just holding things in that asset class that's different from the conventional equities, a little bit in that helps. And I bet you the long term will pay off as well there. And it's already paid off, obviously. But once again, so there's certain things that we know are going to do well. It's not a big mystery. If we talk about other stocks, like we talk about SoFi, Palantir, whatever, name some FUV that we invested in. Yeah. Those were that's speculation bullshit. Like, we don't know what that's going to do. If you buy something of quality, I don't think there's any thought in my mind that it's not going to do better, at least. You have anything to add, guys?
For me,
great philosophy.
For me, I think the one thing I wish I had learned very early on, like one of my, and someone really did try to teach it to me, which was think of it. Think of every company that you buy that's going to be like a big part of your position as something that you utilize during your day-to-day life, that you see, that you can actually feel and touch, and then see the value. Because if you see it, other people are likely to see it too. Like, I was using Google. Why didn't I buy Google? I loved Google. I should have bought Google, goddamn, when I first started using it. Facebook. Everyone and their mother in 2008 was on Facebook. And right now with Instagram and all the other, and WhatsApp, like, I use these products every day. I know the value that they bring to my life. So yes, the stock price may be a little bit waffling, but at the end of the day, they'll end up being big parts. So when I took off my hat as an investor on Tesla and I put it on as, hey, am I a consumer of Tesla, or what are other consumers of Tesla? How do they feel? You know what it is? If the product is good, the stock will fix itself, right? Apple is the same way. Oh, Apple is down to $120. Does that really matter if you freaking love your phone that actually is growing, that every time you buy something, you want to buy an Apple product? No, Apple will still be a great company to buy, and it's going to keep growing for the next 10, 15, 20 years until their product starts sucking. The minute their products become horrible, get the fuck out. You don't want to be in it anymore. You know,
when I was like 21 years old, I had a company. I started a company with some friends, and it was a production company, and we were doing like video production and post, and we started making money for the first time. And we were going to B&H Photo on 33rd Street buying Apple products every week. We were buying a new computer, a new something. And I said to the guys, we should take a small percentage of the money that we're making every month and start buying Apple. No, we're going to reinvest it in the business, et cetera, et cetera. So I was the only one that did. I ended up like being super, I was super broke. I had about $900 to my name. I remember it was like it was December of like 2001 or something like that. And the company was falling apart. And I just had $900 in the bank. I decided to take 10% of all of my money, and I bought Apple at $90, a share price of $14.10. And I continued to DCA for a couple of years. And I would, mind you, I had told my two friends, my business partners, that we should do this, and it was a point of contention. Yeah. They didn't want to invest the money in Apple, and I'm saying, like, we should have. We just spent $7,000 in Apple. Why wouldn't we? Right. Anyway, so I started DCAing, and eventually I probably put in this is between like 2001 and 2003. I might have put in about $10,000 just DCAing. And then I got really busy in my career. And I told Vitaly this, I forgot about my portfolio for 7 years.
It's a good time to forget about it.
Didn't open it. Now, I had bought Netflix. I bought a bunch of other companies, and I forgot about my portfolio in 10 years. So 7 years, how much money do you think I had in Apple from a $10,000 investment DCAing over 2 years? Those 7 or 8 years, from like 2001 to like 2008, I looked at it again in 2009, 10.
How much were you up?
You're muted, Chris. You're muted.
I don't know. It must have been a freaking sweet, like the minute you opened, you probably saw a ton of zeros.
I had like $400,000.
That's nuts.
Wait, hold on. Let's recap for a second. You DCA'd in 2001 to 2003 in Apple. Yeah. You got so busy you forgot you DCA'd and had 10,000. Do you remember the brokerage you used?
I was on ShareBuilder back in the day, which was before Capital One, and they got bought out too. So you could only buy stocks every Tuesday. Like every Tuesday morning, you could only buy stocks. You could put in a certain amount of money and say, do these buys on Tuesday. There was no real-time way of seeing stock prices. I just would DCA in and just kept putting in some money over.
Okay, and then 8 years later, you looked. So can you describe when you opened the portfolio, what triggered you to open it? What was your reaction when you saw that much money?
I was dating a new girl, and we moved in together, and we were talking about maybe trying to buy a house or something. And I was like, man, I think I have some stocks because I think I have some stock. Let me just take a look at this. And when I saw that, bro, I fucking lost my mind. I was like what?
Yeah.
Do you remember if it was morning, if it was night? Were you like?
It was like in the afternoon. It was just like in the afternoon on a random weekend. I even had to like remember what, because eventually E-Trade bought them out, and so I had to find them and who owns my portfolio and do the password reset. And when I finally found it, I think I have a screenshot somewhere of somewhere around that time, because I remember that.
Do you still have them?
No, I sold them. That's what bought me my house.
Yeah, okay.
That's what bought me my house.
No, but the point is well made here. You have to DCA into quality, and Apple was still like they were doing pretty bad in 2001, 2003, but we were using their products. They were still a quality company.
You had the biggest That was after 9/11. It was everything tanked. It was horrible. I just started putting in some money. And I mean, to see the amount of returns, it was like a 4,800% return on Netflix. I mean, thousands of percent. You don't make that if you're worried about the interim, a quarter here, a quarter there. I literally just ignored it, dude. Like, it's like, it seems to me like you want to make the money, but you want to call your shot. You want to make the money exactly the way that you want to make it. Like, I want to do this call that's going to get me this. It's like sometimes you can be wrong, and just like you can be wrong or think you're wrong by holding a stock through a really tumultuous period, and then they have a breakout quarter, and you get to participate in it. You know,
I would think that, you know what it is? It's just, I try to always be as objective. And sometimes I go too much based on what I see on a balance sheet rather than just looking at the product. And I think as a good investor, one of the key mistakes that I've made in the past is that I was too focused on just the balance. You should always be focused on the balance sheet. I'm not saying you shouldn't, but also take into account the popularity of the product and where it's headed towards. So I would say, in terms of Tesla, after my research as a consumer, if you're not buying a Tesla, right now, especially if you're in New Jersey, where I think you guys even have like a $4,000 tax credit in Jersey on top of the federal, dude, and you're just buying an ICE car, I don't know what to tell you. I really don't.
Wait, say it again. Say it again.
No, I'm saying, like, if you're buying an ICE car versus a Tesla in the state of New Jersey.
Oh, in Jersey.
Like,
Yeah.
You're out of your mind, because the amount of value that you'll be getting from a Tesla is literally, I would say, probably 10x better than an ICE car with all the stuff that's going on in terms of development. And the other thing is, I think you guys are right in that we're still on the ground floor of the EV revolution, and these guys are at the leaders of that revolution. So I would say this is very similar to buying Apple in 2007, rather than probably, like, it's definitely not the buying Apple in the year 2003 or 2004 when you bought it, Vitaly. But I think still, if you had bought Apple in 2008, 2009, you still be 10x from where it is, right?
So if you know,
that was a great comment. That was a great comment by.
Well, but we go back to why are you not buying Tesla?
Yeah.
Like, you're saying everything is going to be peachy in the next 5 years. That's what you're saying. Like, Tesla's winning.
Man, y'all are really making me.
No, but I don't understand. This is what I don't get, because like anyone else, an irrational person would be like, you know what? This is the future. We are on the S curve. Like, it does make sense to DC.
You know what it is, Vitaly? You know what it is? It's the quote from Mike Tyson about fighting. He says, everyone has a plan till they get punched in the face. Yeah, and that's exactly what
he's afraid to get punched in the face.
That's what it is. You're afraid to get punched, or you get punched, and then your plan goes out the window, and suddenly you get defensive, and you're like, I don't want to lose my money. I don't want to lose my money. And you forget the lessons. You forget Buffett. You forget everything. Well,
to Chris's defense, if he does want to buy a house, I mean, there's some level of rational conservatism you've got to have here, right? And so I mean,
but this guy's gambling on shitty spreads left and right.
They're not shitty spreads, all right? Trust me, my spreads have made more money.
Whoa! This is a
we want to bring up a bank account here.
Wait, Carlos, when you cash that 400K,
do you want me to take you to the back and show you where the pool's going?
When you cash that 400K, what were the next 3 things you did to grow that 400K? Like, what was your financial plan after that?
Oh, well, after that, I took some money out. I bought, well, obviously I had to pay some taxes. I think that's when Vitaly and I, we took some money and did a Bitcoin miner. Like around then, we were
doing like 2012, we were doing Bitcoin mining. Yeah.
You got to find the photos, because we just trying to amplify it. I paid for some of the apartment stuff, and then I started reinvesting. What was I reinvesting in back then? God, I don't even remember. Oh, I made a shit ton of money on Regeneron. I started doing some investments in like medical. I wasn't as savvy, I would say, as I am today.
Because that 400K you cashed out at the beginning of Fang. So if you kind of just dropped it back in there,
I would have been and at the point of even with that return, had I have left it alone,
Apple alone, yeah.
Had I have just left it alone and not been like, I'm up so much right now that it's got to fall.
Well, you know what you should have done? You should have put those puts on.
Sold it and bought a bunch of puts.
I don't know why you guys are so against the puts.
Hold on. From everything you said, by the way, Apple continued for the next decade.
It still just went on a gangbusters.
Hold on, just went on a gang for the next decade.
Yeah.
And if he kept putting puts on, his returns would have tanked in the toilet. By the way,
No.
He would not get his 4,000. Yes. Very expensive to do long-term puts for 10 years, okay, or 12 years.
You can't buy a 10-year put, and there.
No. Every 2 years you have to re-up.
You'd be buying them and losing money.
Hold on. There are. Let's take one step.
I'm sorry
back.
I went into this again, but
no, it's valid.
You can tell Vitaly feels a certain kind of way. It's like he takes it personal.
If you look at Apple, its PE was never like 200. Okay, so you didn't need to cover your downside for that. Remember what I said to you guys: if the valuation goes way beyond what the norm is, then yes, it's a good idea to buy a put. But right now, like I told you, if for a Tesla at a 30 PE that's still growing at 50% year over year, you don't need to buy puts. But
I think it's a 20-something PE now. It's not even a 30 PE.
I think it's 32 last time I checked, right? But we could take a look. But if your position, especially if it becomes such a large part of your portfolio and it's so highly valued that it has to be completely perfect, that's when buying a put is not a bad idea. If it's something that's a very small speculative position in your portfolio, it doesn't really make a big difference. Dude, by all means, you don't have to buy a put on it, right? Also, if the valuation is pretty decent, where it's either fair or even a little bit overvalued, that's fine. You don't have to buy puts for it. But if you know that the company that you're buying into is like a triple-digit PE, it's crazy amount of risk that you're taking on because it's such a large part of your portfolio, it's smart it's smart to buy a little bit of puts against it so that this way you're covering the downside in the event that something goes wrong, right? Apple is not a good candidate in terms of buying puts on because it was never a point where Apple was like a 200 PE, right? Apple has always been.
But even with that, I have a lot of friends. I have a lot of friends that do various things. They're in film. Some of them are in investments. Some of them are in finance. None of them have made their money shorting things. They all make money buying and holding or buying call options. They buy betting on the future. One of the things I don't like about buying puts, just in principle, is now you're looking at the news and you're looking for the bad news. Now you become, it's like uber pessimist guy who has to just talk everything down because that's how your thesis is right. And I'm like, why are you swimming against the stream? Like everything wants to go up. Assets want to go up. And so I don't know. I hear what you're saying about protecting your downside, and it's a bit of insurance. But
that's the
I
thing.
would rather just sell covered calls against them when it's high, and bet against. I'd rather bet against the people that want to short it. I'd give them, like be the casino for those guys.
Yeah. I want to still hold on to Carlos's point that the way I do what you said, and I've said in the last episode, I sell covered calls when I think something is overvalued. This way I get paid. I keep going back to it. At the end of the day, I want to get paid. I don't want to pay anybody. It's just like a Russian Jewish principle of mine that, except the Mitch somehow got 10 grand from me. I have no idea how that happened. But besides that, I want to get
sweet
paid.
Talker, baby.
The covered calls end up paying me, and the stock is most likely not going to run up to these crazy prices of 350, 400. Well, we're talking about Enphase where I do covered calls. And then I get a chance to put that money in, which not to buy a put. Instead, what I do is just buy stocks that I did want, like Tesla's down, I'm DCing into Tesla. Google's down 50%, I'm DCing into Google with that free money. That's what I'm trying to do because I'm always going long. I've never made good money going short on anything. I've always 10x'd when I went long. So it's a philosophical thing too. Yeah. And it puts you in a mindset because your mindset of these puts is, Carlos, 100% right, is that you want things to go down. You are betting it for it to go down, and then you don't want to DCA into it.
Well, Vitaly, I think you guys have a much stronger. And I'll be one of the things about me that you guys will always get is that I will always be. I will try to be the realist person that I can, right? And my realism, I'll tell you, I don't have a strong stomach as strong as yours when it comes to investing, right? Like I have a whole. Yeah, I would. Yeah, okay, that's the word.
Do you put stop losses? Do you put stop losses on your? Like, do you have stop losses on Meta?
I don't have any stop losses on Meta right now, but that's mainly because it's a spread, right? Where even if it goes down, what's going to end up happening is that the short end of that position will go up and the long end of that position will go down. So it's almost like a tailored way of doing it, right? I should put some stop losses, and you're absolutely
right.
You
shouldn't.
Oh my
God.
No. But
high growth volatile stocks will stop you on each time.
But just like Vitaly's about to say, what ends up happening is at what point do you put that stop loss to the point where you end up negating, your bullishness on it, right? Like at what point I don't want to be knocked out of a position and have to pay taxes on the damn thing either.
That's what's going to happen.
Yeah.
I mean, look, the market is dominated by three things, right? It's big individual investors like whales, institutions, and index funds. And algorithms. So you got four things, and they will crush you if you try to do a 5% or 7% stop loss. It'll wick down to that. You're out of your position. Taxes. You'll have to, the wash sales. You could lose your shirt with that. But you need balls. It's either your balls or your stomach. You need to just.
I don't think it's so hard. Don't you have money? I mean, he's making it sound like it's super hard. Don't you have money that you use just for investing and money that you have like for life?
Yeah, of course. Yeah.
So I don't understand why you can't separate it. This is what if when I bought a house, I wasn't like, okay, is it going up yet? did it start?
Did it tank? Yeah.
No, in fact, I bought it during the crash of 2008. Yeah. I bought my house before the crash, actually. And then it crashed by 125%. I was like, all right, I'm still living here. I don't know. But I'm relating it to anything. It was an investment. So it's like big deal. It went down 25%. I wasn't planning to sell it. So I didn't really care that it went down 25%.
I think what it is we're at two different wealth levels where you guys have enough money so that if the entire market were to go crazy, you lose all the money that you have, you guys will still be fine. Like you could live your life as comfortably as you guys live right now. Me, I would say that I'm in a point where I'm comfortable with my existence right now in my life where I am. And I have extra that I can do more with, but I'm not to the point where I have fuck you money. Like, let's just be clear about it.
We don't have FU money, but also the way you get to that point where you're comfortable is by investing into things that make you uneasy. So
that's true.
It doesn't work where it makes you easy and you feel good about it all the time.
It's the common idea that you don't get a massive reward unless you take a massive risk, whether it's in life, like with me starting a startup, or with you guys with investing in Apple in 2003. Like you can live a middle class life and everything's great, but it seems like you Italian costs are a little bit above middle class because you've taken those extraordinary risks.
Yeah, and you have a nice library behind you, so I don't know what you're talking about.
Yeah, okay.
Intelligent investor, have you read that?
Listen, me and my fake background, Amit and his fake bricks in the background.
These are not fake, guys. What makes you think these are fake?
Open that door. What's behind that door? Who's back there? Is Cart back there? Do you have him kidnapped inside the closet?
Oh, also, by the way.
What is
speaking of taking risks and stuff, I mean, this is probably a good quote to read about taking risks, right? So this is by Charles Bukowski. It's called "Go All the Way." All right. Shout out to Kelly. She got this for me for Christmas. If you're going to try, go all the way. Otherwise, don't even start. This could mean losing girlfriends, wives, relatives, and maybe even your mind. It could mean not eating for 3 or 4 days. It could mean freezing on a park bench. It could mean jail. It could mean diversion. It could mean mockery or isolation. Isolation is the gift. All the others are a test of your endurance, of how much you really want to do it. And you'll do it despite rejection and the worst odds, and it will be better than anything else you can imagine. If you're going to try, go all the way. There is no other feeling like that. You will be alone with the gods. The nights will flame with fire. You will ride life straight to the perfect laughter. It's the only good fight there is. No, so obviously it's more.
Oh, Vitalik and his call. He's like,
it's more about life than philosophy, but I think it does apply to investing. If you have conviction on something, then you go all the way.
No, absolutely. What bothered me, like,
he's gonna show some bullshit.
This is gonna be some quote about.
No, this is good. No, this is to your thing, and I think you and Kelly are fucking. Just want to say that out loud. Okay. This is actually what I believe. And Charlie Munger said it. Can you read it? Is it upside? Is it backwards?
No, it's good.
But you got to read it. You got to read it in Charlie Munger's voice.
If people weren't wrong so often, we wouldn't be so fucking rich. Is exactly what he meant. And this is the way it works. This is the only quote you need. And I keep this on my wall to remind myself how many times people have told me this is not going to work.
I'll tell you Vitalik's real new quote.
And then you should get this on your back wall.
Buy now, buy today, buy tomorrow. That's Vitalik.
Well, buy quality.
And it's not.
First of all, am I not buying quality? I think I'm buying high growth companies that are making money. I'm not saying
don't make me bring Arcimoto into this.
Well, yeah, that was a junk.
Yeah, but Arcimoto, but that's a perfect example, right? But that's a perfect example. That's something where you're looking at the environment. It's a 1-2% allocation, and you're saying if this does, like for example, if I would have put say 5,000 into FUV or let's say 5,000. You put 5,000 into FUV. If it explodes, you're looking at $50,000, $100,000. That's enough to pay for a pool. That eliminates, say, a student loan. Like that eliminates a bill. If not, it's $5,000. It sucks to have to suffer that, but it's not going to end me. That's the trade-off. It's either going to eliminate some crazy bill of mine, or it's going to pay for one of the cars, or I'm going to lose it all. Okay. But I've been down more than 5,000 on Tesla in a day, So you just develop the stomach for it. And when you get through enough of those, you realize markets in general will always go up. And if you just zoom out and you look at these things that look like crazy drops, dropping 50%, up 10%, are nothing. They are erased by a large enough time frame. And that's why a lot of what we're investing in are things where it seems like we're really in the beginning of something with maximum FUD, maximum resistance to people like Apple was back then, right? It was a dark time for Apple, and you see what happened. It was a dark time for Amazon, and you see what happened. You do enough of those, and it becomes easier to stomach it.
And I'm sorry to call out Kelly. I don't know. There's a whole discussion here happening in the comments. But
GS Strategies wants to know if you and Amit are fucking.
Why are you guys saying, bro?
I try not to read the comments, dude. I try not to read the comments.
You gotta read the comments. That's the point of doing a live show. You gotta.
Yeah, you gotta. Is anyone asking a good question? I don't know. I didn't see any comments, but if anyone wants to discuss.
No, well, Matt Money says Carlos and Vitaly are trillionaires that have FU money.
No. I wish I was a trillionaire, but I wouldn't be on this.
You're getting a pool in your backyard. What do you mean you're not a trillionaire?
Oh, pool. That's it. That's what I mean. That's
then I'm a trillionaire because I got a pool.
This guy has a pool before me. Yeah.
Bro, not a lot of people can afford a pool. That's like what, $100,000 with maintenance and everything.
I'm not telling you how much my pool is going to cost, but you're going to want to swim in it when it happens.
Wait, is it like a over the top pool or an inside?
It's a pool that's filled with short seller tears.
Yeah. Well, no, but the reason I got that pool is because everyone keeps outing me like I didn't take any profits on any company, which is ridiculous. Enphase is what's buying me these things, by the way. I wish I took more profits on Tesla. That was the more mistake.
You're buying a pool so that.
No, I'm not buying it for no reason. I have a family. There's a reason for it.
Like I just want my haters to know I have a pool, so I'm gonna build a pool.
No. My point is, I'm trying to say
why aren't you investing that money?
Why aren't you investing, or are you taking any money out? I take out. Kris is like, fuck you guys. Okay, but when you make enough on something, it's okay. That's the other part of investing, by the way. If you're going to more philosophy, that it's okay to sell a couple of things to live life however you want, vacation or a car or whatever. A lot of people consider like, no, you should always be either taking that money and reinvesting it. But no, I'm like, I'm already 45 years old today. I want to live my life a little bit. I don't want to be always like keep every dollar in the market.
Listen, I got a pool. I'm at the Holiday Inn right now, bro. I can go to the pool in a little bit.
No, but there is a philosophical thing that you should live your life too. If you can invest and live your life or take out some of those profits, you should. So at some point, I won't keep Enphase. At some point, I won't keep Tesla. That my job is not to hold Elon shares for the rest of my life, right? So I think Carlos is the same way. He wants to live his life. We're getting older up there. We're going to die.
Absolutely. I do regret, and I accept that the only reason I made those returns on Apple is because I ignored the portfolio. Had I have looked at that portfolio, I would have sold it. I know I would have
100%.
sold it.
You would have sold it when you doubled.
Yeah, I would have sold when it doubled and said, this can't go up forever. And I would have been an idiot, right? And so this is what I'm trying to learn now. This is when I say, I did the math and I'm like, wow, I could have been actually completely retired by 32 years old had I have just held. And that's something that, believe me, I kick myself for that. So I'm trying to do that now. But to Vitaly's point, your life you're meant to live it. And so, yes, this year I decided I'm 45 years old. I have wanted a Model X Plaid since 2016. And I know that I can take that money and buy Palantir with it, but I'm going to buy
and burn it.
And watch it burn. But I was like, fuck it. I'm going to buy a Model X Plaid and drive that instead.
No, that was stupid. You should have bought Palantir with it.
I should have bought Palantir, right? And then I can
we can. When it halves again, we'll buy a couple of shares of Palantir.
But the point is, yes, I could have invested that money. Enphase bought me that.
But there's a philosophy there that not every dollar is meant to be for investing. And don't get me wrong, I've invested for so long and lived a very frugal lifestyle. So I never got any big ticket items. It's only this last in my 40s where I'm like, okay, this is ridiculous now. why do I have to go to a community pool?
No, listen, and we've had these conversations. Like, I'll call them up and I'll be like,
I don't want to swim with those fucking poor people.
Like,
wow, that's so messed up, bro. Damn, yo,
Okay.
know,
but it's kind of true.
Oh no, I meant clipping this for sure. That's fucking.
Yeah. That's the part.
I hate to say this, but like once you enjoy the taste of the good life, you really become accustomed to it. Like for me right now, I have American Express Platinum, so I go to like the Centurion lounges at LaGuardia, right? And I'm just like, one time they let like some other people in. I was like, what?
What are these commoners doing in here?
What are these peasants doing here?
Right? Who let these?
Chris is like, once you've had the good life, you went to Starbucks every day for a week.
that's not the good life, man. That's a daily. No,
but you to get this FU money, which Mac Money has apparently. Me and Carlos don't have FU money, but we're gonna live our lives. So to get that, you need to invest in things that. You know what? They might not 100% work out. We don't know.
Odia doesn't count, bro. I put money in Odia. I'm the lead investor.
Well, that was your worst investment of the year, I gotta say.
I mean, but like that's the funny thing, bro. Like if I pull it off, a startup tends to 50 to 100x. Like your 5,000,
100x, man.
Your 5,000 would go to 500. Vitaly's 10 would go to 1 million. Like, but obviously the probability is low.
Investing in a friend is much easier than investing in some speculative name. All right, that's how I feel.
Well, I'm gonna ask you a question. A simple question.
Mm-hmm.
A company like Tesla, obviously a profitable company, right? You're not worried about them going bankrupt.
No,
right?
Not at all. Not at all.
Do you think there's no chance in hell that they're not going to double at least?
No, I think
what's the chance that they won't double? What's
the definitely going to double? I think they'll definitely double, especially from where we are today. Easy double in the next.
Well, this is what I mean. There is no loss for you at all.
Most companies, right, have CEOs that don't have other companies. Right. Like most companies have one CEO, like Tim Cook. What did he do before? He was a supply chain guy. But Elon has already done. We've already seen SpaceX. We've already seen PayPal. Like, how much more this is what I'm saying. How much more do you need to say, I'm going to bet like on this guy or on this company? And again, I don't want to, it's not financial advice, right? I'm not trying to push anyone where I'm responsible, but I'm just saying, like, you have to ask yourself, like, at what point is your way of thinking or your conservatism actually you're leaving money on the table? Like, you're just never pulling the trigger. You know what I'm saying? Like, we live right now, it's literally a generational change happening, right? We live during the generational change to social media, and you see you're invested in Meta. That's what they created, right? We're seeing the change in our energy consumption. And that's, that's Tesla, that's Enphase. And you're seeing this change in the monetary system with the digitization of money in crypto. This is not going to happen again. The next big change is going to be long after we're dead. So we have a tremendous opportunity right now.
I think the next thing is AI, guys. Like, that's the next thing that we should probably talk about next week when we have a little bit more time. Because
that's another one, right? That's another. AI will never be invented again. It's going to be invented in our lifetime, or not invented, but it's going to become ubiquitous and in our lifetime. To not ride that train is a disservice to your kids, like your grandkids that aren't even born yet. You want them to say, "Oh, how did you? Why are you here in Mykonos right now?" Oh, my grandfather had a podcast. Remember those? And my grandfather was investing in whatever the fuck in Microsoft. You know what I'm saying?
Yeah,
I know. You know what his story is going to be? My grandpa had
almost
spreads. My grandpa had spreads, and he made $35. So,
like, I know a guy whose grandfather was like buying AT&T, and now he's got inherited like 10,000 shares of AT&T.
That's like
that his grandfather was buying when AT&T was like getting. I mean, you want to be that guy. You want to be the guy that they tell that story about, right? Because they say that a man dies twice, right? The time you physically die and the time someone utters your name for the last time. I want my kids and my grandkids to be like, we had a streak of weird Carlos Almontes, but this one that was born in the 70s, he took advantage of Apple and Netflix and Tesla and Bitcoin, and like, he gave me this life. That's what I want.
Yep.
All good investing is risky, by the way.
Yeah.
You cannot eliminate that. So it feels like you want to eliminate risk.
I want to limit risk. That's all.
You're trying to eliminate it. If you limited it, then DCAing actually limits risk, by the way, because then you're you're just buying and you average it over a couple of years. So you get
I think
the value of the stock, right? The
Yeah.
value of the company is baked into your DCAing. That limits your risk.
Yeah.
But if something crashes like Meta did and you did see that opportunity,
Yeah.
and Tesla's there, it did crash, by the way. It's
Yeah,
down
yeah.
70%.
I think what 65% now.
My point is it did crash. And it could go further down, but I mean, like, at what point do you just say, let me buy a little bit of this, you know? Like,
Vitaly and I also, we're not crazy. We try to mitigate risk too. It's just not the number one position in priority. The priority is to make the outsized gain, and maybe like priority number 2 is to limit the downside, but that's not the ultimate priority. I have a bunch of friends whose their number one priority is to limit the downside, and what they're going to retire with is the money that they've invested. Yeah, they're gonna, with maybe 5 or 10% over what they've invested.
Social Security will mean something to them.
Social Security or something. Yeah,
and Social Security will mean jack shit to me. That'll be the difference. So that's
$2,500 a month. That's not going to be much in 20 years.
Nah, bro, I'll live off that Audia money. That's what I'm banking on.
No, but that's a good point. But I agree with Vitaly, because I've been struggling to buy Tesla as well at 120, right? And hearing this conversation was good for me because, like, all right, let's say it goes down to 90. The limit of the risk is my big risk right now is my friends are making 120K at JP Morgan and I'm making nothing, but I'm chasing a dream that if it works, those friends, they're never going to make as much money as I would make with the amount of money the amount of ownership I have in my own company, my own startup. But if it doesn't work and I'm buying Tesla from 120 to 90 and I trust it can 3-5x over the next couple of years, even if I only put 10 grand in, I mean, like,
exactly.
Here's an idea. Amit, try to do the exercise that I did and tell us what your experience is next week on the pod, where you just take away your investor hat completely and say, you know what, if I was in the market to buy a car and I was looking at a Tesla, what are some of the things that I would look for? And say that, hey, you know what, this car makes more sense than the others, or makes less sense. I think a fact-finding mission. I think even our viewers.
Oh, but so like the thing is,
I'm gonna give to our
viewers. Even if I do that, I'm such an idiot when it comes to cars, but I'm knowledgeable enough to know there is nothing other than a Tesla when it comes to EVs. And I think that's the majority of the fucking world. Like, if you ask me to take off my investor head and be like, you're in the market for a car, but you can't buy an ICE vehicle, there is nothing that comes close to me other than Tesla, even though every competitor has a version of an EV that they're going. Like, it doesn't even factor into my brain.
think our viewers, if you guys are watching at home, run this exercise in your head. Imagine right now that you were a prospective car buyer and you just literally are doing research on the car that you are going to buy. And if it comes out to be something that's close to a Tesla, that should be your investing thesis right there, to say, you know what, maybe it's time to DCA into this company. Because after doing my research on that as a consumer, now I'm more likely to buy a Tesla at the stock itself. I'll probably wait on the car because I'm not in the time zone because I still have payments on our Lexus, and we don't have like a mileage or the need for an additional car right now. But I think the next year when we buy a house, that's going to be the second purchase that we make right after the house is buy the EV, and it's probably going to be like a Model Y.
After to get solar.
Huh? I'm not doing solar. I haven't done Enphase, or I'm not an Enphase consumer yet. Get off my back.
He's going to switch as soon as this pod ends where he switches to Enphase. We just end the pod. It's over.
It's over.
There's no point for the pod anymore.
All right, we got to end the pod here. It's time. This is a good one, man. Let us know in the chat if you guys enjoyed it. Everyone's links in the description. Carlos, that was a great story. I mean, I didn't even know you had that in your life. So that was awesome.
Thanks. Yeah, man. We've been in this game for a while. I know we look young, but like we're in our 40s, man.
You guys look like you guys look really young. Everyone in the chat is.
But I mean, we were in our 20s when like George Bush was president. You know what I'm saying? Like,
you know, one thing that I've always goddamn hated about Tesla is the cult around it, and I really need it. I got to stop thinking that way, because every time
that cult protects the stock.
I know, but that's the thing. My mind
didn't do that much this year.
Yeah.
Like, my mind is when I have a guy like, oh, I'll be honest. All right. When I first started, like in 2015, what is it, 2017, 18, like saw Jeremy Financial Education. Hey, holy
Tesla, my Tesla.
Tesla, I was like, bro, that is a fucking stupid stock to buy. An idiot like this is bumping that shit. So I'm not gonna buy that stock. You know what I mean? But if it was like someone intelligent, like, yeah, stock, Tesla is a very good company because blah, 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 I might have considered it. But man, all these shills that came around the Tesla thing just made me not want to look at the company as much, you know. And I really, and that's a personal problem, because just because someone off a certain way as a hype person doesn't necessarily mean that they're wrong. It just means that, hey, you know, they just have a cult following. That's all.
It's annoying to us too. I mean, I could speak for Vitaly. I don't. You know,
yeah.
Just,
do you see my two Teslas behind me? The way Jeremy sits in front.
I know he's got the. It's so annoying.
It's so cringe. It's ridiculous. Obviously, right? But I'll show it to you right now. Let's go. Yeah. Anyway, pod over.
Happy birthday,
guys.
Vitaly.
Happy B-Day, Vitaly.
Let's get a green. Wait, the markets are closed tomorrow, right?
Yeah, they're closed.
All right, a green day for Vitaly on Tuesday. For your birthday.
Yes.
And on your birthday, we need.
I don't want a green day. That's the problem.
Yeah, I
get a red day.
All right, so fuck your birthday.
I'm still DCAing Google and Amazon and Tesla. I don't need a green day.
No, we got to stop cursing so much, because I think this is going to get demonetized for sure. Like, new Google is not playing around. New YouTube.
Well, we're only going to demonetize on a Mitch channel. When we go to our own channel, we'll stop cursing.
But even if they do, bro, it kind of makes it fun. As long as it's in the first 5 minutes, I think they let it slide. But
okay, yeah.
We never got demonetized so far on YouTube.
No, but I agree. Guys, next pod, less F words. We promise.
Yeah. It should, like, just in case someone under, like, let's say 17, 18, like around that age is want to watch. Right. I think it's still pretty bad for cursing, you know, because it could be.
I give no shit about someone who's young watching this and hearing cursing. That is not my concern. Is the money of the monetization. I give zero shits if there's a.
Come on, man.
You know the shit they see on TikTok, bro? They're worried about F word, like.
Yeah, my kids are cursing. They're 9 and 10.
Amir, this is the best show. Do it every week, please. All right. On that note, we'll see you next week.
Well, before we go, can everybody give which show is better, SoFi Daily or
Palantir Weekly?
Or Palantir Weekly?
Finance Junkies.
There you go. Which one's Sundays. Better? Real quick in the comments, just put them in. I'm curious.
Finance Junkies is a good show. We got a good conversation.
Greg is saying this and Palantir Weekly are my favorite podcasts.
Okay. Can you ban Greg?
Kelly's
Bye.
Finance Junkie.